Today we see like what is the current scenario of S&P 500 and what are the valuations. So we will more focusing on, I'm sharing with you all about the valuations and all. So if you see like it is the S&P is up around 0.57% up, and it has already crossed 6021, it has already crossed 6,000, and in uptrend in 5 days if we see it's 1.81, it's given a return. It started with 5,914 and then it currently is 6021, where in a month is a 3.40 S&P, given the return in 6 months is 13, and in YTD is 26.96, and for a year return is 32.33. So currently S&P is all-time high. So it's the right time for the investment, and I'm just going to sharing with you all the valuations, like what is indicating about the S&P. So first we see the sector-wise, like these are the sectors that have given a maximum return last session, like utility, and then your consumer, the communications and IT. So if you see last in a month, like these sectors, these are the sectors like are given a maximum return, where these are the sectors like healthcare have not given a return from last 3 months. So now this little bit there is a uptrend in this sector, where again this material sector not given return but still not giving, where in IT, all the company like all the company like Amazon and then Microsoft, it's down currently because in 3 months this sector given a 4% return, and if you see in 1 month the sector hardly any given return. So now they that could be a improvement in this sector. So this is the currently where I can see the financial are given a good return, but these are the sector like IT sector, and these are the sectors communication. Coming days could be they could be a return. If you see the what is the valuation is indicating, like 5 year trend line of P ratios. If you see here the P was in December 20, it was 38, it's all time high. Where here the in here when there was a COVID breakdown, the P last touched by 27, and there was a big COVID crash, and then from 27 the P had decreased to 22. Again the market boomed, and the P rose to 38 with 5 years average all time high. Then after boom, there's a correction in the P, and it was down around 19 in 2022 September. Again, it rose to 24. Again, there was a correction in October. So if you see this from October, there was a good trend in the S&P, and again the P rose to 27, then down again is 20. So if you see in 5 years, the P is all time high, other than this COVID, and in 10 years average, if you see in 10 years also the P ratio is very high. If you see the average of the P in 10 years but if starting from 20 to starting from 20 in 2 years due to COVID, the P started with 22 and end up with 38 and again come back. So 22, I can say that 22, 20, 22, 22 is the currently average of P ratio, where the best time to invest is around 20, where currently P is again is 27.52. So there could be a coming correction in the market, because the P, because there are two things, or the market will from here will go to a straight boom, and the market will go around 5 to 8% above, and there will be a big correction coming up. Or from here, if there is a correction, the market, if the markets get U-turn again, and from here the market start downfall, then you may able to decide there will be coming up a correction in the P ratio. In 20 years, if you see the trend line, in 2019, there was a financial crisis. Then the P rose to 120, because those who are investing at the bottom of the P in 2006, they made the money triple, four times in 2 3 years. Again, there was a big fall in the market, and the P again back to 14. Then slowly rose to 23. So, if you see the 10 years also, it is saying, if you see the 20 years chart also, again in 20 years, if you leave this to scenario, COVID and this financial crisis, the P ratio is very high. The in 10 years, in 20 years, the best P I can say that to enter in the market was around 20, with the low with around 18. So that is it is the P indicating the market is all time very high, and the last you can say that if the P will cross around 26, 20, so it will definitely go to the 30, and then there will be a big crash coming up. So if you are investing currently, be cautious and not put all your money around now. If I is sharing with the indicator of buffer indicator, we call it total market cap to US GDP. If you see in 5 years, the last was like the higher was 199.50. Again today it is like around 207. So already it has surpassed 200. So it is very overvalued. I can say that 207 is very over, where the undervaluations is like around 80 to 100. Then this time it was 151, it was 151, and again it was overvalued. But though it is 197, 137, so 137, you see it fair value, you can say that you can do the investing in 10 years. If you see here, in 10 years also, it is all-time high. This GDP ratio in last 10 years, it never reached. The best time to invest was around, if you want to invest here, we go for around 135, 140. You enter here, then you make money. Probably the average, I can say that is around 145, and the lowest is around lowest around 142. 144 around one. So if you see the ratio, like the in last last 10 years, if you see the swing, it was the bottom was around 118. Now it's 120, around more than 200. So in 20 years also, if you see the average, it might indicating like 119. But I don't think it will ever able to reach 119. This have last reached in 2023. It is showing like they are 119, like 148. So 148, and in 20 years, if you see, it has reached bottom is 151. So, so the best time for the investment is around 150. When it will go below 150, there is a more time you can multiple your money and get at least get a good return. So all this indicating that there is a fall is coming up. There is a big market correction coming up currently, and you should be very cautious about your investment. If you see the technical chart of S&P 500, if you here see, it has already crossed the average of RSI and is going uptrend. And here also it has break his support level, also resistance level also. And if you see this line, like this is 50 days moving average, 200 moving average also been crossed, and it is going up. So how long it will be? Because already if you see there, the maximum you can go up to 70, and sometime it cross 70, and it take suppose if we cross 70 also, if I take here the example, there could be a return around the return I can expect is around 2% to 2 to 3% more. I'm expecting that market will go up from here. Like suppose the market is 6,100 currently, around 6,000, and then around 3% it will go at 180. So around 6,200 you can expect. After 6,200, there could be a big fall coming up. So be cautious if you're investing here. And if you see here, the VX has currently now turned around and going uptrend. So when it's going uptrend, it indicating that there is a big coming fall in the market. So VIX is indicating a big fall. P ratios again, it is in high valuations, and then market to GDP is also in high valuations. So everything indicating that is all are high valuations. So make sure if you're investing here, make sure you should be very cautious about your investment. And this is for now. Like the coming, I think the coming session, the market could be in a swing position where it could be reaching more to 6,100 or 6,000. But there could be a fall. The fall is coming, so it could be from starting from next session, or the fall could be from after a couple of session or coming weeks. So thank you for time watching my video about S&P 500, and I hope it will help you in your investing journey. Do subscribe my channel. Thank you so much.